Good afternoon. This is Fari Hamzi. It's about 5:04 p.m. Eastern, Wednesday, July 13th, 2022. I'm stricken with COVID in LAX. I'm sorry, in LA, and in self quarantine myself initially. Right, I sensed there was a problem. Once I got the test later on that day, that was last Sunday, it came positive. And then I did a PCR uh, not last Sunday. I'm sorry, Sunday the 3rd. Then Sunday the 10th, I did a Saturday the 9th. I did a PCR, and the PCR was fairly complex. Actually, it was the PCR. A friend of mine has a lab that does it for hospitals and the medical clinics. I've known him for years. And his brother used to work with me, so his family. I went there, and 45 minutes later, it showed the whole thing. Boom, against a bunch of other bacteria, other SARS and all that. Sure enough, I was clear on everything except COVID. Yesterday, I came just a hair from being negative. Tomorrow, I'm doing another one later on today, again at home. Tomorrow, I have a PCR at 11, and that's the comprehensive again. Not as fancy as the what my friend did for me, but CVS will do it. They have a history of my stuff, and including my shots and all that. So we're doing that so that I want to make sure I'm ready for flight. I have a flight in mind on Tuesday. I need to have a couple of days to catch up. Hi, Michael. How are you? With those folks who I had to cancel last minute, hi, Nancy. Let me, Nancy, get you on the other side. And so you're there, and then also Cash. Cash is helping me out quite a bit. Thank you. And so, just want to make sure. Hi, David. How are you? Make sure we're on the right track here. As I mentioned before, this has been very dramatic and pressure on me, but we did release 4.6 on ORB. It's done very, very good. It was in a kind of a semi-alpha slash beta test for about 10 days. Last 7 days of it, it was a beta with about 9 people. That's 2 trades a day. Doesn't trade on Wednesdays, so it's very comprehensive. We have started now set up a chart. I mean a sheet on Google Docs. I have not developed what I want to put here, which would be the analytics as data comes in. But what this is as this data is being kept up with by Marshall. One of the first guys says, "Listen, I'll trade it live. See, trade it on the machine." But I said to this third party in Chicago that all they do a package for friends and family. This is a small amount of money. Not my family is not very rich. This is a small, but I want to give them a chance to take a benefit of what the big guys are doing with the system. Those are in our chat room, and you can see what's done. This is the gross for the first month. This is the total gross for the second month, and that's where we are. 4.6 kicked here. We post the total gain for the day for the MNQs. I should say 3 MNQs. 3 MNQs P&L. This is the commission fees. The net income on forward is mathematics. It adds up. And what we're adding is called income per day of trading day. So as each day comes, this is trading day. It's not what you see Wednesdays are missing. There's no Wednesdays there. Okay. As this comes in, it computes what has it made so far up to that's level divided by the number of trading days. So you can see where it settles. It's going to be around $100 a day, plus or minus. On the $1,200 money, it's not too shabby. Not too shabby, exactly. And so we're doing it for marketing too. It's open. We send links out. It's view only. You can't edit because we have to make sure data integrity is crucial. Only he and I can edit this. And he's doing that. We're just starting on NQs. It will be May 5th. It'll be in, I think, May, or like June 5th, June 7th. So we're going to take some of the data out, starts from this area down. Going forward, and then so you can see both systems. It's very similar as you've seen it on the systems we have driven on our own machines or yours. It's 10 to 1. So if it made 1,600 that day, on three NQs, three MNQs. On three NQs was 16,000. And I remember that day. I remember that. This was a big down day. The big down days are just huge, 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 huge. And that means what? It's a good hedge for your long portfolio. Okay. Um, so that we'll send that out frequently out and so on. So that's what I've been working on. It's a little fun project, but I got to build the stuff we did with the options, which Nancy, you and I, we got to update that. That we have more trades in. We also launched a number of trades last week on options, and this week we start on PMT. My goal was I'm going to get back on a horse once we get 4-6 out. As you know, I'm a promise keeper. If I say something, I do it. If I get pushed into something, I usually say no because I don't know what's involved. I got to make a decision because once I say yes, it's a go, no matter what. So I'm not good at saying yes. You hear a lot of no's from me, but my goal was get to 4-6. Now what's left of 4-6 is a couple of dialog boxes, which is to alert you when you're using the system. When you're using the system, are you using 3 minutes? Okay, are you hold on. Are you using the right symbol? Is a, for example, this should be actually, let me see. Yeah, this is MNQ. This you go in there and it says you say NQU22. If I put anything else down, when you put an @ sign, by the way, this becomes a back test. The machine knows, no, that's a back test. If you put the MNQ up, then I'm sorry, NQU. I'm sorry, NQU. This becomes a local lead contract. Okay, but we're putting those in to alert you. Also on a rollover, it reminds you you're in the wrong contract. You're building those logics in there. Hey Jack, so that tells you on your own when you're trading what the do's and don'ts are. It's crucial. And we've done the code. All we need is the pop up. The pop up is what we're finishing. It's a graphics work, and that's only available on the newer versions of the TradeStation. So, but we're gonna get those wrapped up before the next issue of the next key for August. They'll be in place. Okay. As far as we're concerned, this project is done. Now, because we did it this way, we took care of Dictate.d out. That allows us to have a clean DMZ coming in, which means what? We can trade these periods. We can trade CPI. We can trade the non-farm and all that. Not in the same package. It'll be a different module. It's a different module to run because the targets have to be different. But we can run 3 systems before this and HR. We were trying to get the HR done. We got it done. It took us longer to get the DMZ in there. By having that, now we can trade the HR, whatever that might be. Okay? So we took the plunge. I'm not a Band-Aid guy. You know me. I go in with a knife. Yeah, I take it out and replace it. I decide we'll take the plunge, take a little bit longer, make sure this is correct. The problem with having these few bars. These few bars are the continuous pricing versus .D. We have to use some numerical approximation. I put a lot of effort in there. At the end, I said no, it's not good enough. Some days the epsilon, the error rate, error data, the epsilon was much bigger than 0, or not even close to 0. Okay, so at the limit, epsilon goes to 0, but day in day out, it wasn't. So we scrapped that and we said no, we're going to rewrite the code now. Because we put the DMZ in there, it made obsolete 14 of our exits. So this is a clean, brand new for all measures. Right, it's actually grew in size because of DMZ, and now we're at 731. Guess what that number is? Look up SSBN 731. That's Tico's ship, USS Alabama. If you see the movie Crimson Tide, that's his ship. Sorry, I'm having some orange juice. So we're hitting 731 lines. Complete rewrite. We had 2 errors. We caught those. Obviously, when you do a rewrite, you have a propensity to experience some errors because of it's a new rewrite. Some things were really tested before are no longer in there. Some new stuff is added. On new stuff, you have to be careful. But I'm not new to software development, neither is our programmer. So between he and I, probably got 45 years with TradeStation programming. Yeah, that's why we work so well. He does the API, which is Chicago, the execution. I do the indicators and local screens and all that. So very happy with our progress. But that basically finishes 4.6. And we may call it 4.7, whatever, once we're done with the dialog boxes. Now, also in this, we have version control. Not that we have a rollover control, we also have version control. That means you cannot have a software key for each month, and you're not tied to a precise copy of this code as an indicator, as a strategy you have to run. The indicators are shared between the NQ and MNQ. They're exactly the same. Okay, they're exactly the same. But there's a version control involved. That means that if you are like some of the clients we have that keep all the copies and you get confused, you bring him in, goes no go. Yeah, you have a problem. The version control stops that and doesn't let you go. You have to have precisely. So what we're doing now, we're not really doing software keys anymore. We send you one file with all the indicators. I'm saying one indicator and two strategies in it with the keys embedded. This way, it comes to you in one date. You put that in and you're good. And then, of course, there's a TSW, which is a workspace that makes it turnkey. You put the ELD in, you put TSW, you launch. That's simple. Alex joined us today. He was doing MNQ before, took a hiatus. He came back to do the full NQ, and he was up and running less than 5 minutes. I mean, I called him saying, hey, I sent you the keys. I have the keys with me here. I took the liberty of taking everything with me on a laptop. Last time I got stuck here was my dad was passing away, and I got stuck here for like 3 weeks without any software, without anything. It was a really disaster. I just brought them with me. I said, even though I'm here a short period, I'm traveling. I'm supposed to really not work and relax a little bit and see some family members I haven't seen in 5 to 10 years, some of them, both in Southern California and Northern California, which I ended up canceling. But I still want to have my keys with me, my software with me. So I took a copy of a main machine with the codes in there and brought it here, set it up here. Once I got here, I set it up in the laptop, and I'm seeing exactly what's happening there. I actually come to the chat rooms using another login because our remote access will not allow us to attach a microphone. So I came in with another customer, and so we're there. Anything else? I don't know what I'll tell you. Oh, most likely I'll fly back on Tuesday. If that changes, I'll let you know. Nancy is doing a tremendous job with the options. We can see from her comments. Also, today I showed her how she can also do the option for the PMT Pro. And it was a breeze. We have a slight problem with getting to Amazon, but I had Larry, our CTO, do it like a Band-Aid, and he can send it upload. So we're okay until I get back. Once I get back, I'll reinstall it here too, so I'm portable. Hi, Ani, come on in. So, having said that, let's move forward. We just put a trade up for you guys. Now, and it's built in the website. You log in and you go in. Okay. Let's go to Econ Calendar first, and then we do charts. Now, and let's try to keep this to about an hour. Depends how what kind of energy I have. Okay, today I understand the CPI did a number on everybody. If you listen to some of these characters on like on Comedy Central, or better known as CNBC, they're actually not bad. Jeremy Siegel, he teaches at Wharton. There's a Nobel Prize winner in economics. He had a point that, remember, the way CPI is calculated and captured, it has a little bit of lag in it. So even though we're looking at a June report of CPI, the data used is not June either, unfortunately. And he should know. Now, he feels that by the time we really catch up to where we are now, based on his empirical observations of the basket of prices looking at, we should be beginning to tick down. Okay, that's why you see days like this as kind of a reversal. If you go to a chart now, you'd see that here's a timer chart. Well, it was level 17, turned back. Yeah, if you go to Lowry, you see what a strong run up we had. To kind of reversing the gap down we had from the CPI data. They gave back toward the end. The pros came in and still pressured it. But I'm of the belief that I think the worst we have seen. You could see from the sense of the chart is beginning to do some basing here. Are we ready to ratchet up and go higher? Not yet. Not yet. I think this 39.50 area, which is our target on the PFT Pro. This is issue 363, 363 that Nancy just put up. That would be a big overhead resistance that we got to get through. Notice it's 2 sigma and 50 bar. We've got to get through that. Are we going to get through it? Nobody knows. If I knew, I wouldn't be here. Neither would you. It's a marker. It's a location on the chart. It's a behavior of the crowd, and we try to measure that, and we try to adjust our risk reward accordingly. But if we get up there, and then I'll start revving up also on the option package too. Yeah. And most likely we'll go to high beta names. Nancy has a pretty good, decent watch list that she and I use. The moment we get to that level on SPX, then we got a green light to load up and go. Well, I need from you guys pay attention. You gotta be near your emails. Don't come to me and say I missed this yesterday. That's not good. You should be better saying I got it, not lie to me, be honest, but say I got it, and let me say this. If I hear from you, I got it but didn't want to participate, I respect that more. But why did you miss it? That's no good. Because this is the time you make money. Remember, we make money from at extremes. When we're pressured down heavy and there's an uptick comes, that's our turn. When we're way up, like 2020, where everybody, February 2020, everybody was so happy. All things are good. And Admiral Tico comes and says, Daddy, let's sell it. That's how you make money. And we sold the heck out of it on February 12th. Go there, you can see. Or you can go to Time and Digest. They'll tell you what the position was. We killed it. But that's what you want to do. So prepare for that. Be around. Watch the Twitter. Watch your emails. If you're in the chat room, see what me or Nancy or Peter are talking about, because we could be near that event. Okay. Let's go to Canary chart. Sorry, I haven't posted everything. Sorry, I don't have everything set up like I usually do. I apologize, but bear with me. Canaries. Let's get. Okay. All right. Let's see. This is crucial for us to pay quick attention here to Russell and transportation. Very quiet. No signal here. It's kind of not sure of itself. Let it be. Okay. All right. Fine. As long as it doesn't down tick. We're down 1% here. Is that down? That looks like we went to 1 sigma. Yeah, negative. Not good. So, yeah, I'd like to see a little bit more progress there. Not seeing it, and we're down just a tad on Russell. Yeah. All right. Yeah. I would also, that's utilities. Forget that. Hold on. Let me come back here to NDX. I would also mark this level. Yeah. 12,100. That's the equivalent point for us. 12,100 on the cash. Okay. That's what we want to look at. Oh, guys, look at those. Okay, next. SP1 Momo. What do we do here? Sorry, guys, didn't have that ready either. I'm on limited CPU, so I didn't have everything on SP1 Momo. Okay, and so I didn't have everything on. I apologize. But I'd rather have a webinar than have nothing. I know a lot of people were asking me how am I doing? Am I okay? All that. Just want to hear you guys have you guys hear my voice. Make sure that you know I'm okay. It's not easy, but I'm okay. First couple of days were very bad. Last on the July 4th and July 5th were toughest days of my life in a long time, if health-wise. Remember, I have psoriasis. I'm in very high risk category. But my dad was a firefighter. We're a ship of war. We don't give up this easily. Okay, we're getting a little uptick on downside. Obviously, you should not be expecting anything up on the upside on 52 weeks. Just that there. This tells me that the worst is behind us at peak there. It was a 200 reading or so. So, but it's a number of weeks back. So typically, we're very, very close to the bottom. Are we getting to a 200 day, 200 week? Yes, we are very close. 200 days above us, 43, 40, 70. This is 200 week. And as you guys remember, early on, I was talking about this. Obviously, it was way, way too aggressive. And the problem is theta. You can't sit in these trades this long. If you're in the futures, that's also the margin call. But theta kills your premium, and futures kills you get margin calls with these adverse moves because of in the context of the bearish. Market rally during a bearish market. So that's what you see there, failures at the sigma levels and pushes down. But as we get less and less of a pressure down, as we get these days where we open down and we close up or close almost up, that says what? There's a resilience there in the marketplace, and they're buying some of these dips. And it's a basing process. It's going to take time. The issue is also exogenous news, which none of us can predict. But at least that's where we are. Let's see. Mon was -3. It was a little bit higher before. Obviously, we gave up. No signal here either. This is -1. So for that reason, this chart for now is not giving us any signal. The trender, 1, 2, 6, 7. All 8 are negative. Usually that's near flip time. Because all 8 are negative, even if you have 7 negatives, you're flipped up to the top. If you got all 6 or 7 or 8 positive, then you have a chance to possibility of topping formation and flipping to the downside. Let's see. SQ. Let's go to SQ. Okay, we're beginning to uptick a tad. We're really based down here about 117, 118 area. As you know, this is all-time low, or like 110, 111, I believe. 111.76. Design is 100 to 150. Obviously, we have exceeded the design limit on the high side a long time ago. It goes way back there. I think 2021, yeah, last year, about a year ago, we took that baby out. Yeah, June 25th. Yeah, went to all-time high on the SQ. Very quiet right now. Basically says we do not see a tail risk as defined by activity of the big boys. So they think there's not money in it for them to be in some sort of spread or outright deep out of the money on, let's say, near contract. I'm sorry, fund contract plus near month. So looking at again, I would look at options, or this is SPX options. It would be monthly. So looking at July is almost there. This week is July. So I would say between now and middle of September, they don't expect a drop. Now, I'm going to leave myself some room because we're forecasting. Myself some room for October. You can't include October there. Late September, post Jewish high holidays, and into early October, anything is goes. But historically, it's low of the market, and maybe we get our flush. The problem with all of this is that we haven't seen a flush. Baby with bathwater is still hanging out on the 10th floor. That's no good. We need to get a flush. We're not having it. How do we know it's a flush? Huge volume. Good drop as a surprise element with a high volume. We don't see that there. That always works. You know what? That's behavioral science. Has nothing to do with anything else. That's just the way it's been. If you go to the tulips, Mania, it was there too. It was at 1600, 1700s. In Holland, it's still there. So, not there yet. Let's go to TD. Okay, TD is our short name for time and digest. We're still running on the ESN, I'm sorry, on VIX, we're still running July as a lead. That should change. Is this week the third one? I don't know. We'll see what expiring is. I think it is, isn't it? I think so. 15 is. Otherwise, it'll be here. It's going to expire here or not. But somehow here we got to make sure we roll over. The data is showing we're close. Okay. This is July. That's August. So I'll double check against my option chain in option station to get exact precise roll of the VX and make sure we're in the right delta, which is long. Right now we're long July. You go down here, you right click, you're long July. You can build this yourself, guys. This is something simple. You should have it on your machine. We're long July and short October. So we're going to roll to either, I assume by end of the week. I think either way. Either the expire is going to be tomorrow or it's going to be next week. We got to roll. Because it hasn't rolled over, I think it's next week expiry for the VIX. And it's a Tuesday. Last trade is Tuesday, settlement in the morning Wednesday. It's an even thing. It's an odd calculation there. That's just because it's looking at 30-day forward. Okay, so it's not Friday to Friday. It's 30 days, so 30 days from a Friday expiration looks like next Tuesday type of deal. So that's where we are. But we'll roll from July to August and October to November. So it would be long August, short November. That changes delta a little bit. Right now we're looking at negative 2.14. By the way, notice this is coming to line to be a more normal now. You know why? Interest rates. As we get to more interest rates in the environment, where we're not throwing free money to everybody and his brother, this thing is going to get more normalized because of the values. So negative 214, it's neutral. No reading here. It's not too extreme, and it's not too high up. The high up would be around zero. That means the market is very, very oversold. When the VIX is very negative, we're overbought. Remember, it's an inverse asset. You have to flip it in your head. Okay. Rendezvous with our stock our size, we may have already done that. So maybe we're in this leg. I don't know. I kind of like to think this is short term. I'm going to pull back up. And today was encouraging. And we're close. Maybe we get one more day on the downside and hit 25 and we should bounce up. And then go and try to take the 50-day bar out. Is there any other chart that I haven't discussed? This canaries. Okay, we're good there. All right, so let's go to let's go to this chart first. We'll come back to what do you call it? Econ calendar. I think I rushed it. My bad. I have a mild headache. Nothing major. Okay, now I'm sorry. The screen is small. You guys got spoiled. This is small. Okay, there we go. Now, okay. Again. Separation between the two moving lines. Moving averages. See what's happening? Yeah, we're still wide. We're still wide, and we're near lows. It could make a W. It's not impossible. So we get the actual data itself to make a W and then go up. But down here, we're at extreme. Mid-June, we're at extreme here. I mean, I've seen 5 and change, and I'd say 7 and change, maybe twice in 14 years. Down here. Up there is different. Up here is different. We've had it pretty much a 40-year bull run. I have looked at this from early part of 2008. Early part. Yeah. Before Bear Stearns went down. Before Bear Stearns went down, I was looking at this chart. And so I've got that history in my head. Let's go to 5 years. You can give you 5 years, Murray. All right. What's the deal here? 5 years. How do I? Oh, update. Sorry, update. You can see what I'm talking about. It's not that often we go down there. That's what's it. Remember, that's the December 2018, the Christmas time. Remember, here's the COVID drop, and here we are. So if you look at it like that, you'll see we're somewhat down there. Almost looks like head and shoulder for reversal. I wouldn't go under and jump up and go long, but I would be ready. I would wait. Don't. If you have some cash, don't buy BAWA's names now, and shorten or dilute your firepower. Hold on, hold on. Buying BAWA stocks right now is not smart. You want to go with investment grade names right now. It's absolutely crucial because it could take us time. It would take us time for about 6 months to a year before we see the results. So I would want to still bet on one thing and one thing only: management, balance sheet, products. That only comes from investment grade companies. Somebody tells you this name and somebody they're doing this, and that. There's some VC money coming. Those are all formative years. Who knows where they're going to end up? Go with the winners. Go with the ones that you see they're doing so well. One of them is Amazon. One of them is NVIDIA. I'll throw you a couple of names to think about. Leg FT, we're long both of them. We're beginning to accumulate for affiliates. This is the time you do shopping. This is the time you go shopping, okay? I don't mean to the mall. Forget the mall. Keep the cash. You got to buy some names here. Remember, Muhammad spends. Jesus saves. Moses invests. Are you with me? If you understand that, ask Monroe. Monroe can teach you that. So again, let me repeat. Muhammad spends. Got all that oil money. They don't know what to do with it. They can't drink it, so they spend it. Jesus saves. And then Moses invests. So go with Moses. By the way, that's my sister's model. So, okay. Let me do a quick turnaround here and go into econ data. I think we didn't spend enough time on it. I don't know what that mortgage app came in. Let me take a look here. It's a black color report. Let me see what we had. Okay, that makes sense. A little bit lower. Okay. 336, that's in line. And then refinance is coming back. Oh, interesting. Maybe because of a down to. Oh, I know what we missed. We missed our treasuries. Sorry, guys, I'm not up to par on everything. My bad. Let's go to treasuries. Hold on. Notice I'm running also 9.5 here. For a client, we have to run 9.5 also, which I hate. Yeah, it's just 11 is coming. Trade session 11 is coming. And so I tell them, what are you going to do? You better gear up and be ready for the new technology. Oh, I had treasuries. Oh, I didn't see it. I had treasuries. Okay. Remarkable is this drop here, guys. Okay. In the midst of all this talk about CPI being so high, why is it dropping like that? Short term is going up. I'm all for it. I just don't want, and technically, I think as of yesterday, we were in inverted curve up on the treasuries. There was a report by Bloomberg. I posted it. Don't ask me what it was yet. I forgot. Seriously, I get some of these headaches. They go away, but it's one of those. I at least had posted for you guys. But look at the treasuries. What they've done. These are the yield to maturities. This is getting healthy. This got to get healthy. Okay, and of course, this is because of the report today. But the fact that we eased up, that's why the refinance numbers went up a little bit. That all makes sense. Econ calendar. Okay, let me go back. Let's see what we have in front of us. EI reports treasuries. No. Who's speaking? Nobody. PPI tomorrow. Jobless claims. Ooh. Retail sales. Holy mackerel. Okay, and then industrial production. So we're gonna have next 2 days packed. Let me see what the industrial production is expected. That's your consensus. That's how it changes to report. 0.1 plus 2. Capitalization is going up a little bit. Okay, yeah. That's causing inflation too. Final demand on PPI. Hold on. 0.8 to 0.8. Okay. That's the range. Okay, and then that's a 9. A little bit downtick, a tad of downtick. Okay, we'll see. That could help if it could be. We've got to see a little bit of downtick somewhere in here. It won't be much, but at least it ease up the pressure on the Fed. Earlier today, they were talking about 100 points. Fed is behind the curve. We talked about it in January and February. Hit 100 and 100 now. They didn't. Shock therapy sometimes is good. But who the hell I am? I'm just a poor dumb immigrant. So maybe I should send Animal Chico to talk to them. Retail sales. Wow. Wow. Wow, 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 wow. Can this come true? Wow. I think that's too aggressive. Look at from prior. Wow. Wow. So Friday morning is going to be key. Friday morning. Yeah, I can't wait for 4.7, whatever that is, or a module of it to run the early mornings. Yeah, yeah. We just have to change some parameters, but the data and the launch and all that stuff is good. Just we have to change some money management levels. All right, that's basically it. I mean, we've gone through what we talked about here. I think all things being equal, and the skew is also showing that. Here's a skew. I think we may have a 5% downside, but a decent amount of upside. Let's say next 6 months. You gotta be patient. We're buying options very long duration now. That means yes, we're paying a little bit more on the premiums, but you gotta realize coming out of this is not gonna be instantaneous. You gotta assume you gotta be wrong. You gotta leave yourself some room to be wrong, but not jolted out of the trade, and so that participate on the upside. With that said, I open the room for questions. Any questions? Anything you want me to go over? Anything you want me to analyze on? Any trades you have? I'll be more than they'll hop out there. Where is it? There we go. Sorry. There we go. And where's my questions? Oh, there we go. Okay. Michael, 1 second, please. Okay. Hold on. Okay, there's a big question from Ani. What else? Okay. Quick question, reflection, and thoughts process. Okay. Let me just open this up so I can read the question. No problem. By the way, guys, I appreciate these because it also teach me a few things, and even they believe it or not. And group think is very dangerous, so you gotta get out of that. Okay. As Fed tightens, remember, I'm not an economist, honey. Okay, I'm a chartist, but as a Fed tightens, it makes more expensive. That strip, that's what corporates cheap money to supply. Fed needs to really, really kill demand to offset a slowing supply. Yeah, demand won't to flush as you say, a bit more because of otherwise demand keeps pressuring. I'm in Budapest now. Everyone is paying like no tomorrow, and it's not even a tad wealthy. Yeah, yeah. We almost want consumer to complain before we buy them. Yeah, I think emerging markets need to get greater. Your extra comment, very appreciated. Okay, well, I'm not very good at Europe. I'm very provincial. I'm kind of a S&P guy, SPX, 500 names in the US, and I'm a kind of a look at products management and balance sheet types. Obviously, you don't look at all 500. There's quite a bit of similarity in, let's say, top 25, top 40 of them. Uh, with the problem we have with the consumer economy in the U.S. Other parts of the world, including the Western world and more developed countries, are slightly different. We run on the turn of the money, the churning of the money, which is transactional. We're very, very transactional in the U.S. The pressure we have is really coming from a couple of areas. One is that we're really messed up on supply chain. This goes back to, you can see on the shipping freight claim, fees and also the backlogs at the ports and so on. The way to kill and then there's a demand from employment. When you have a 3.9% unemployment, you don't have a recession. Okay, you don't. It's just that instead you have a employment component that's going to the CPI. You know, just the job demand is too heavy. Now we have Jolts was showing what 11 million openings. So we are. It's ridiculous how opening jobs we have. Our problem really there to me as a policy maker, which I'm not, but let's say I was, I would adjust the H1 visa and stuff. We got to do what Canada does: bring people in based on their merits, and bring them with buses, with airplanes, with whatever, in hordes, and then close the southern border. We're getting a wrong immigration in. Close the southern border completely. Open up the H1 visas based on their merits. We got to fill those jobs. As long as we're not filling those jobs, the existing employees are demanding higher wages, which is a good component into CPI. And actually, for the first time in a while, it's an employee market, not an employer market. So I don't know how you're going to crush the demand, but one way is, try to, um, in light of the, I'm sorry, I don't know how you're going to crush the demand in light of the fact that you have a employment scarcity that's going on right now. I mean, job openings are plenty, but we have no fills. With that said, again, I'm not an economist, but uh, we got two big components going in there. One is energy. You can feel the gas pump here. And the other one is the salary inflation that we have. So that forces the Fed to deal with the headline number. An average guy here does not read beyond that. That's our problem. We never pay attention to the minutia. You don't go to BLS, download the data, and see, oh, how many were construction? How many were, let's say, on a non-farm? How many were for healthcare? How much were for housing? We don't look at that. We just look at top number, and top number is plus or minus in there. Not an average, but it's a plus or minus. Yeah, and there are different animals there. Frankly, I think it's going to be with us for a while. The CPI is going to be there, but the market is going to see that. Remember, CPI is seen by market a certain way, with the consumer a certain way, with the government a certain way. What matters is what the market participants look at. And I think it's probably a safe to bet with you that the first one out is going to be the market participants. They're going to see that. They're going to sense it. That's why markets in aggregates have been a very good tool of predicting the discounted cash value of a cash flow. So they start turning. I bet you the numbers will catch up. The reporting data will catch up and show the inflation is not as bad as you think. I think that's what Jeremy Siegel was also pushing toward. Jury's still out. We shall see. I think today was not a good one on data. Obviously, you saw the drop, but you also saw how NQs and ES were bought pretty strongly, and the smart money steps in. The fact that this SQ doesn't have much of a value here, that tells me that they think they're done with the downside. Remember when the upside was, when the uptick reading was, and look, we've already dropped quite a bit. So at the margin, I think we're basically down on the bottom. But for how inflation number is going to come in, that's econ area. I'm not good at it. I just know enough to be dangerous. That's all. So I'll leave it at that. Good question, Arnie, but that I'm going to leave it at that. Which one do you think will perform better? NDX, obviously NDX. But there's another question here, Michael. Which one will bottom first? Okay, that's a different question. I would like to say both will bottom at about the same time, but NDX at a higher level. If you look at 91 war with Iraq, if you look at 2003, these are where these two were in tandem moving. And both situations were exogenous pressure on the country. You'd see that, for example, in 91, no, in 2002, we made a low in July, I believe, on SPX. So did NDX, made its own low. Then we went into October of 2002. when things were getting heated up about potentially U.S. taking incursion into Iraq, um, we dropped again. We dropped again, but what did SPX do? SPX went and retested the low of July 2002. This is in October 2002, but NDX didn't. NDX also dropped, but not as far back down. And it turned around. And that was the key tell that we're going to rally. And then, of course, we got to March of 2003. And as we started the shock and awe, it just took off. Now, right before that, people were betting heavily on the downside. But they didn't realize this power of Pentagon and their Showtime. They just got everything on TV. They did the same thing they did in 91. Put some digital stuff up on TV and made ridiculous comments about the other side. And of course, we were right. There's no question. And with the promise of technology turned around. Along the way, NDX was lead, constantly lead. And I expect that to do the same thing. One of the reasons our system trades on NDX, not SPX, is that it's 100 names, it's 100 best names, it's 100 best names in technology. Okay, yeah, you got some odd stuff in there, Costco and all that, but those are technology too. If you think about it, that whole area there, Silicon Valley, is the future of this country. That's why what they call the left coast, Canada. I mean, California is the 5th largest economy in the world by itself. So I don't think anybody's going to mess around with it. This is not Bitcoin. You know, what Admiral Tico said about Bitcoin and the gap on the chart, and he went there, all that is one thing. It's not going to happen with NDX. So, and yet it has what we need. It's got the volatility we need. It's got robustness, and so on and so forth. Now, one monkey thrown in there is that, I guess one, or wrench, or whatever you call it, thrown in there is this Tesla. But I think Tesla will also calm down. Already we know that, what's his name? Elon Musk folded last Friday, or was it last Thursday, and is not going to do the Twitter deal. Well, lo and behold, 3 weeks earlier, Admiral Tico did a free cash flow analysis on Twitter and on the Facebook, saying there's no way you can have a $52 million free cash flow. Forget about non-cash, free cash flow, and then because non-cash gain is not going to pay any bills. He's not going to pay any debt. He cannot float 30, I think 16 or 7 or 13. No, it was more like 16. 15 or 16 billion new notes. He was going to put on Twitter, placed by assets of Twitter. This is already placed quite a bit of his Tesla, to come in and be able to borrow against it and close the deal. It's not going to happen. Why? The interest payments, the coupon on that 13 billion or 16 billion, whatever that is, was 390 mil. There's no way, and year in, year out, there's no way you can pay 52 million, a debt of 390 million each year. So, and then he went back to get more financing, which meant what? He had to lessen the borrowing and bring in more cash. He's got to sell Tesla. The problem is that it's getting close to his margin cost because he's already pledged so much. So he's in a conundrum. Admiral Tico was absolutely right in his greater wisdom that said, Daddy, this is not going to happen. I said, okay, write it up. You believe in that? Write it up. And that's how he went into Twitter and Facebook. And now you can see what's happening with his character, with his feed. So here's my question. Do you Tico? Are you guys following Admiral Tico? You can follow him here. I mean, maybe type it in here for you guys. It's at Admiral Tico. And he will take care of you. I just posted it here. Admiral Tico on Twitter. But that's it. That's it for me. It's about 2:50. This is about 3, almost 6 o'clock. Hey, Steve, how are you, sir? Hey, Gary, Jason. Okay, this will be posted as always on YouTube, our YouTube channel. Next week I should be back. I'm feeling better. I'm doing another test right after this, home test, and then tomorrow full blown PCR. If I can get the negative tomorrow, which I think I can, I feel that way, then upward and onward. I'll be home late Tuesday and Wednesday. The next PMT webinar will be from home. Those PMT members, the both cash and the pro, we said that Nancy took showed her valor and went a half an hour. We trade together that we've been talking most of the day today to look at, and we had a little snag with Amazon posting because they posted our charts. But Larry kicked in, so it was teamwork. Three of us got it done, and you should be able to get in there and execute that. If not, early in the morning is still doable. Okay. If you're in the chat room, I'll be in. Let me know. I'll calculate the pressure. You know, the vols, the delta and the theta, and if you need to change something, I'll make a suggestion. It's a 3 weeks hold. Our average hold. So we're going with August 5th expirations. Should be in your email, and it's on the website now. We're beginning to post back on the website. Last week you caught up on the HA options, and this week was PMT. And so at least we're now back on the website. When we go and fill in the few issues that were by email only, Nancy knows how to do that, and we're in a good spot. Okay. As I promised, I said, let me get 4.6 on. As a matter of fact, I launched 4.6 for the ORB from this laptop with a temperature. Didn't let me stop. We hit our target. I said, let me get out, and it went out, and it was executed that day. We had 9 people testing it for over a week, and it was in the chat room for about 8-9 trading days. Okay, remember, it doesn't trade on Wednesdays. So, and we had no errors. We found one error early on. We corrected that, and we feel comfortable. So with that done, what's this? Is ORB contagious? The electronic part of it, it could be. It could be. Just put a mask on. Yes, put a mask on. Yeah. But also, and then let me tell you something else, Rich. Because this version has both rollover control and version control, yes, you're going to get 4.6, or you're going to get nothing at all. The beauty of this, as a matter of fact, one of the guys made a mistake, one of the beta guys, made a mistake of going in there, and he had to make a small mistake in importing. But that's what that software is written there as a checksum. The checksum kicked in and said, you got wrong version. Yeah. So we got to make sure going forward now that you have the right key. Each software key is tied to a specific version of the software. So you cannot run like another gentleman we had. He was running at 4.5, ready to go 4.6. He's running 4.4. He's running 4.4. Okay, and starting 4.5, we put version control in. Yeah, and then 4.6 we put in rollover control. We just need dialog boxes to pop and say, here's your mistake. Boom. And the reason we do that is to add more intelligence, to cut back on tech support. Because these are small stuff. And rather than embarrassing you or myself or anybody else, it shows you what you're doing wrong. Go back and change it. You're running. You're fine. So we're going to be there. But that was a good question, Rich. I'll get you some soup. Yeah. Yeah, I'll have the Lambo guy deliver you some soup. Anything else, guys? All right. Oh, and one last thing. I'm going to show you this, and then I'm going to wrap this up. Again, this is the beauty of what we worked on. We're proud of it. This is we build a system. A Google Docs. We build a sharing environment for collaborative purposes that shows. There you go. That shows what our system is running at a third-party system house in Chicago. It's for friends and family. My family is not that rich, so I made something very, very simple. It started with MNQ, 3 MNQs, and right now margins are $1,200 because they went to quarter. Yeah, they dropped it. So current margin is $413 each, times 3 is $1,235. We're going to be also looking at NQ trades. These are from actual statements, actual live trades, and the actual commission and fees. And this is what was done. made 2,200 first month. That was about 90. Actually, it's more than that now if you look at that margin. Yeah, but back then it was 92%. His margin was twice of this, was 2,500, so it was 92%, and here it was 56% by the time we get to this level. But that's where we are. And then July is here, and we didn't trade today. This gentleman, Marshall Field, not Marshall Field, Marshall Fried, yeah, close. This is his data. He gave us permission to use his data. I told him I need the statement, so I want to be sure we have it. That the broker, the FCM is StoneX. The system trades on trades on obviously on TradeStation, but executes on StoneX, which is a very, very, very large FCM. There are 110 countries. Look at StoneX.com. Huge, huge. And they're basically a commodity shop. And they use, I think, Citi or Chase because you really have to. I think it's Citi because you have to take deposits in those countries. You can't have a mom and pop bank here, within his community bank doing this. So it's fairly kosher. And then 2 or 3 years after that, one of the guys came and said, "Ferry, I want to do NQ." I said, "Fine, let me set it up too." We set it up with StoneX. We have no data yet, but he started about here. So we're going to add data coming here. Now I asked Marshall to do the same thing. Why? Marshall is a son of a bitch. That's what I need. I need someone who understands this in detail. And then we create a link out of this, do the sharing, and we send it out. We'll keep on sending it out. Just keep the link. You don't need to log in. Some of you have already added you to the email. You have a visitor right, so it means you can visit it. You cannot edit it. If you see something wrong, email me. We just cannot let people having editing because they could get destroyed. Matter of fact, my cousin was going to do the NQ for me. This is too much. Yeah, you gotta be careful. I just didn't want him to be behind and trying to catch up. But in a day or two, you will see also analytics come here. Analytics like this. Not exactly that, but hold on. Hold on, where is this? I don't know where I put it. Worksheets, station, reports, value performance. Yeah, you would get analytics like I tell you, save this here. 712. There you go, 712. Like this. So when you open that up, it yeah. Hold on, where is it? So we could go there and say, I want the trade list. I'm going to be doing something like this. The summary, win losses, that kind of stuff. What's our ratios, that kind of stuff. I'm going to build the right sound of it. And as the data comes in daily, it recomputes. It's a going forward look at those two packages. As a great marketing tool. For people who don't know what we're doing, this is new for them. Boom. Take a look what we have done. And also creates a transparency for those in the family and friends program. They don't have chat rooms. They don't have the time. They don't even understand what I'm doing. All they want, I'm trying to print some money for them. That's all. In the meantime, it's a very good way of showing what we have done because that's live. It's third-party money, third-party running. I mean, all they get the same email elite members get. That's it. The StoneX gets it, they execute. And hands-free, boom, boom. And it's 3 units. It's not 4. It's not 7. It's not what you want to be. No, it's 3 units. So it's cookie cutter. So we're measuring apples with apples. As these results come in, it's one at a time. Each one. Look at the $1,400 Monday. Remember, this system is about time. It doesn't need a lot of money. It needs a lot of patience. As Alex would say, it needs a lot of rooming. Yes, it needs a lot of rooming. That means you got to read some Rumi and drink some tea. Because here's what happens. It's doing about, let's say, at full margin, 20, normal margin, at which is 50%. This is at 25%. Let's say it's 2,500. So we did about 92% there. We did about 56% here. Okay, net. I mean, that's just what was added. Now, that has babies. What do you do with the babies? You reinvest. You buy another unit. So I'm coming up with an Excel worksheet that allows me to know what the pyramiding is going to be. With the pyramiding, oh God, this is a phenomenal return. As long as you can keep this up. Remember, since October, we only had one losing month. That was February. What happened in February? Comrade Putin decided to go on an excursion. As long as we don't have crazy people like Putin about, we're going to be fine. All right? Thank you for your time. I got to log off. I got to go and take my test. Any questions for me? I mean, real questions. Did I miss anything? Good luck. Thank you so much. I'm going to tell. Thanks, Rich. I appreciate it, sir. All right. We have about 30 people there, 40 people. I've got another 20 people coming in. I'm getting cousins I didn't know I had cousins. All of a sudden, they're coming out of woodwork. Yeah, but anyhow. Oh, I met you when you were 4 years old. Who the hell? I don't remember anybody when you were 4 years old. Anyhow. Such is life in the fast lane. See you guys. All the best. I'll post this on YouTube immediately.